All right, folks, this is going to be the last part of Chapter 8. A little bit more about tax credits. Now we're down to the business tax credits. Okay? And again, what are they for? Obviously, government wants to promote certain behaviors. Okay? So, they want companies to do certain things. By the way, if the credit exceeds the gross tax, you can carry it back 1 year and carry it forward 20. Okay, so basically, if you have a excess credit, you can go back and refile the years before his return. You can do an amended for 1 year back, and then you can carry it forward 20 until you use it up. Foreign tax credit, it's non-refundable, and you can carry back 1 and forward up to 10 years. Okay, so depending upon which type of credit it is. By the way, tax credit, just to let you know, they actually come off in a certain way. So credit application, how does it work? Well, the first one is non-refundable personal. And if you have excess credit here, you lose it. Okay. The next is business. That's second. And any excess credit you have to carry back and carry over. And refundable personal, notice that's last. Excess credit gets refunded. So notice they do all these other credits first. So the refundable personal, since they do all of the other ones first, the refundable personal means that you have a chance to. It's applied last. So after these other ones are applied, if you get those credits, you could actually get a bigger refund. Okay. All right. By the way, something to know, taxes must be paid as you go. That's why you have deductions in your paycheck. Imagine if they didn't take any money out. And you owed all that money at once. Like, how would you get people to comply? That's number one. Number two, the government's got to pay their bills, so they need cash flow. Okay, so withholding treated as made equally throughout the year. That's how most people do it when you have a regular job. Okay. Estimated tax payments. If you are self-employed, April 15th, June 15th, September 15th, and January 15th. There are underpayment penalties, but they have something called a safe harbor provision. That is, if you've put in 90% of your current tax liability or 100% of the previous year, and if you're over, you make more than 150, 110%, then you're good. That means you can't be, that means if you had some, let's say 1 year you put in $20,000, the year before you put in $20,000. And let's say you made over 150, and this year you put in 22,000, but it turns out you owed 50. It doesn't matter because you put in 100%, 110% of the previous tax year's liability. Because, sometimes when you're self-employed, it can swing wildly. So they don't want you to underpay, but they understand that it could be hard to estimate. Okay? So underpayment penalties, these are applied on a quarterly basis. And notice they take that 90% or they take that 100%, and that's how they calculate it. And it's based on the amount of underpayment at each quarter times the federal short-term rate plus 3%. Okay, so whatever this underpayment is times, so it's underpayment. So this times 3% whatever the short-term rate is plus 3%. So 3 plus question mark, I guess. Okay. By the way, filing requirements, again, if tax return only if their gross income exceeds certain thresholds, and it depends upon filing status, it depends upon age. But remember, you might have a refund involved. So, oftentimes it's worth checking. Go ahead and do the return anyway, just to see, especially if it doesn't cost you anything to do it. Due date, April 15th, unless there's a holiday involved. You can extend the filing up to 6 months. You may not extend the due date for paying the taxes. So you better have paid them, but you can extend the filing for up to 6 months, and it's automatic. Okay. All right. Now, the late filing payment, if you file late, by the way, you'd be better off filing the return without the money. Okay, so notice, filing late penalty is 5% of tax owed per month up to 25% if not fraudulent. 15% per month up to 75% if fraudulent. No penalty if no tax is owed as of the due date. Okay, so 5% of the tax owed. Now take a look at the late payment penalty. If you don't pay the entire tax owed but due date of return, 0.5% of the tax owed for each month. So 0.5% or 5%. So notice late payment is better than late filing. Okay, you don't want to file late. Okay, even if you don't have the money, the government, I think, matter of fact, there's an automatic button now. If you owe less than $10,000, they'll automatically set up create a payment thing for you. Okay, you never want to file late. Even if you don't have the money, file the return. Okay. If both of these apply in the same month, the late filing penalty for the month and its corresponding maximum penalty is reduced by 0.5%. So they're not going to double hit you, is what they're saying. Okay. So here's an example. Courtney filed her return on April 10th, and it included with a check of $4,053 made payable to the United States Treasury. That consisted of her underpaid tax liability of $4,000, and they're showing you example in the textbook, and $53 underpayment penalty, example 826. If Courtney waited till May 1 to file, so she made it here, this was timely. This was before 4/15. What if she'd have done this on May 1st? What would it have cost her? 5% per month, right? So it would have been $4,000 that she paid late times the 5% times 1 month or a portion thereof. Okay, combined penalty is limited to 5%. So it would cost her $200 to wait that 21 day. I think it's 21 days. Would have cost $200. Okay. All right, folks. That's it for chapter 8. We'll be back with another chapter in just a little bit.